please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, after a wait of 7 years, a verdict in the 2G case was finally delivered by the Patiala court yesterday. In a landmark judgment, the special CBI court Judge O.P. Saini acquitted all the accused, including the former minister A. Raja, DMK leader Kanimoi and a clutch of corporate honchos. CNN News 18's Zaka Jacob spoke to the DMK leader Kanimoi after the judgment was passed in her favor to know her side of the story. Here's a slice.
See, being accused of corruption is not an easy burden to carry, and it has been very painful. And but of course, it's a learning experience also. And politically, I've learnt a lot in these 6 years.
You were a director in what was essentially a private company.
Yes, for 2 weeks before the launch of the television channel. And I'm a minority shareholder, and I had resigned nearly 1.5 or 2 years before the so-called transaction.
So why do you think you had to go through all of this?
I'd love to know the answers, and I really don't know. I'm searching for those answers, and because it was surprising, because I've never been involved in the working of the television channel, and I'm not interested. It's not up my interest thing, and I've hardly been there also. I'm into the Kalinga TV office, and I was only director before the launch of the channel, and we had filed my resignation with the ROC. So, I mean, you can't dispute the ROC, and the CBI I had filed a case saying that I was in a meeting, in a board meeting, after I had resigned, and I had signed it. But there are records which was produced in the court that I had not signed those meetings. I had not gone for any of the board meetings after I had resigned, and not even AGM meetings. So there is a proof on record. There are documentary evidence, and why did the CBI go against that and file a charge sheet?
So you said you've learned a lot politically. Who then was the CBI taking instructions from to as Judge Saini says in this case, the CBI has clearly failed to prove beyond reasonable doubt?
Because they had based their case entire, I mean, you know the CAG reports, like everything, even a welfare scheme, they say is a loss to the government. And we've never come across any case which is based on a notional loss which has been quoted by the CAG. But this is the first time, and there are a lot of questions. I mean, so many other things happened in the country, and people involved in that today are in places of power. And I won't say it is just a political conspiracy. It was much larger than that.
Now, the Reserve Bank of India released its financial stability report. They say that the overall risks to the banking sector remain elevated due to asset quality concerns. Lata Venkatesh joins us early this morning with all those details. Hi Lata, good morning.
Good morning. Well, the financial stability report looks at a whole host of things. It looks at public sector banks, NBFCs, every actor in the financial sector, and tries to check out that if you stress them, that if there is, a run on the rupee, if there is some kind of macroeconomic stress, crude went to $100, then how will the banks react? But they also give you a baseline scenario, and that's what is important, because that's what is the most likely case. Now, first, they give you historically gross NPAs of banks have risen from 10.2 to 10.2 from 9.6% in March. This number is known to the market. They also calculate stressed advances, which they point out has risen from 12.1 to 12.2. I would consider that a positive, because this is indicating that the stress has not risen much. It's just, this includes restructured advances and stuff like that. But the next line is what is worrisome. As you pointed out, they are expecting GNPAs to rise from 10.2 to 10.8 by September, by next March, and to 11.1 by next September. So clearly, from the RBI's point of view, the worst is not yet over as far as provisioning and bad assets. But if you notice, it is what is the total stress? The total stress is 12. So if the total stress is 12, at 11.1 you have more or less recognized most of the stress. That could be the positive way of looking at it. And then public sector banks, of course, the situation is worse. The GNPAs were already 13.5 and the stress ratio was 16.2. And there, look at the difference. It was 15.6 in March. It has risen to 16.2. That is what gives a little bit of disquiet. I mean, if total stressed advances of PSBs have risen by so much, they don't give you a future number for this. But over there, you just get the feeling that probably, things can get a little worse. But for the system as a whole, it looks like most of the stress is recognized.
And any impact on the markets on account of this?
Well, I would assume that people will read it a bit negatively because NPAs have not peaked yet and the stressed advances of PSUs in particular has risen rather substantially. The RBI is not even giving you a number as to how it might peak. So it doesn't look all that positive for PSU banks just yet.
Okay, all right, Lata, thanks very much for that. But moving on, Anil Ambani made headlines as he fought to save the group's flagship telecom business this year. CNBC TV18's Ritu Singh recaps the younger Ambani's race against time to bring Relcom out of its debt trap, even as he fends off various attempts by creditors to drag his company to the bankruptcy court.
Since the split of the Reliance Group in 2006, the fates of the two Ambani brothers have taken completely different turns. But at no time has the difference in fortunes been starker than it was in 2017. 11 years after the two brothers staked claim to different businesses within the group, Mukesh Ambani, who took over the reins to the flagship Reliance Industries, is the country's richest man and has since expanded into a retail business and a telecom venture that has disrupted the entire telecom industry. Anil Ambani, meanwhile, who took control of the Reliance Group's telecom, power, entertainment and financial services businesses, has had to spend more time fighting to keep the group's whopping 1.15 lakh crore rupee debt in check than in enjoying small victories. Victories like the fact that his financial services business, Reliance Capital, is perhaps the only business in the group that continues to give good returns. Victories like the group's asset management business, Reliance Nippon, listing on the exchanges at a premium of over 17%. For one, Anil Ambani's attention has been claimed by the group's infra arm, which is sitting on a debt pile of 26,000 crore rupees. To make a dent in this debt, Reliance Infra has agreed to sell its entire stake in its Mumbai power business to Adani Transmission. The younger Ambani has also been preoccupied with Reliance Power, which has seen its debt double over the last 5 years to 30,000 crore rupees and lost nearly 88% in market cap since its listing in 2008.
Anil Ambani is now facing his biggest crisis yet. His telecom venture Reliance Communications reported a 2,700 crore rupee loss in the September quarter, with its debt ballooning to over 45,700 crore rupees. Further, the company also recently defaulted in its payments to both lenders as well as bondholders, a development that may lead to the younger Ambani losing control of his company.
For now, Anil Ambani is studying several options to ensure the survival of Reliance Communications. According to a statement by the company, it has presented a zero loan write-off plan to its lenders. The plan envisages repayment of debt to the tune of 17,000 crore rupees by asset monetization, another 10,000 crore rupees through the sale and commercial development of its real estate holdings, and giving lenders equity to the tune of 7,000 crore rupees by the end of December. This would give the lenders a majority stake in the company under RBI's strategic debt restructuring guidelines.
It is only right for the lenders to keep all their options open, that at the end of that December period, correct, that they have the option to do whatever form of restructuring that they would like to do.
With his relatively newer business interest, Reliance Defence and Engineering, Ambani has made some headway. The asset, which grew from his 2015 takeover of debt-ridden Pipavav Defence, has received approval from a consortium of lenders to go ahead with a corporate debt restructuring exit plan. This comes with a longer maturity period, 800 crore rupees.
Even as that defense story plays out, Ambani's biggest worry remains Reliance Communications' debt trap. With the company's Chinese lenders attempting to drag it to the bankruptcy court, it leaves Anil Ambani in a 270-day deadline. Either resolve the crisis or disconnect from the telecom business. In Mumbai, Ritu Singh.
Let's get talking about the commodity and the currency space and go across to Manisha Gupta this morning. Manisha, hi.
Hi, thank you for that. It still is a theme playing about the weakness in US dollar, which has been supportive for the commodity prices. So with the US dollar inching slightly further more down, you have seen support continue. And even as there are reports that the North Sea pipeline will start, the outflow of crude oil from the January first week of 2018, you haven't seen that take away the sheen from the crude oil prices, which are still trading at a 2-week highs. The fact is that you have seen a decline in the U.S. inventories. The demand estimates for 2018 are positive, and the OPEC has yet again come out with statements saying that they will see an exit strategy coming in sooner as the markets are heating up. They do see the supply and demand getting normal, balanced by third quarter of 2018, and that is when they are looking to exit output cuts in a gradual phased manner. On the other side, the metal space have continued to do well as well. We have seen fresh buying continued. The volumes, of course, seem to be thinning, but the weakness in US dollar has been supportive. You have seen copper prices gain up by 2% in this week, so we are now up 27% for 2017. Actually, if you look at the metal index itself, it is up by 24%. So all the metals have performed in the positive. The best performance, of course, coming in from palladium, which is up by 50% in this year, the highest in 17 years. And, of course, minor metals like cobalt and lithium have been the stars in the metal space.
Okay, all right. Thanks so much for that, Manisha. Well, let's hop across. Mangalam standing by. He's going to tell us all the cues coming in from the derivatives market. Mangalam.
Well, Nigel, early rollovers, they've begun ahead of the holiday season, so that's something that we're watching out for. So all the flows that there are, they may be muddled with these expiry hues. And even in index options, remember yesterday was the Nifty Bank weekly options expiry, so because of which a lot of the cues, a lot of the flows would be muddled. But qualitatively, the Nifty Jan futures, they've added close to around 45 lakh shares in just the last 3 trading sessions, which indicates that, yes, early rollovers have begun. Secondly, rollovers so far have been 25%. So next week, we'll have to carefully watch out for what the number is, what kind of conviction traders are going into the new year and the new series with. And the FII long exposure in index futures, that one is still at 53%. Remember, the high for this series has been 10495, and the 10,500 call has maximum open interest of close to around 65 lakh shares. So if at all in the next week we do cross that, there could be a case for some sort of short covering, because if you take a look at the downside, that one's protected. A lot of puts have been written. The 10,000 put has around 80 lakh shares, as well as the 10,400 put, which has 56 lakh shares. Watch out for a lot of the mid caps. 12 stocks in FNO ban, 5 of them which moved a lot came into the FNO ban in yesterday's trading session itself.
Okay, all right, Mangalam, thanks very much for that. Well, on to our bullseye corner now. Let's hear out what our contestants have picked for the last day of the week ahead of the Christmas weekend.
My first call is a buy call on Oil India Limited. The closing price of the stock was 358. It could be bought for an intraday target of 370, and a stop loss of 350 should be kept on the stock. My second call is again a buy call on HCC. The closing price of the stock was 39.5. It could be bought for an intraday target of 43, and a stop loss of 36 should be strictly kept on the stock. My third call would be a buy call on India Cements. The closing price of the stock was 184. It could be bought for an intraday target of 189, and a stop loss of 180 should be kept on the stock. My final call would be again a buy call on Anantraj. The closing price of the stock was 67.75. It could be bought for a target of 74, and a stop loss of 61 should be kept on the stock.
I have a sell call on PC Jewelers futures. Stop loss 453.20 and target 424.20. Next one is a sell call on Godrej Industries futures. Stop loss 617 and target 580. The third one is Century Textile futures on the short side. Stop loss 1425 and target 1332. The last one is also on the short side, that is Dalmia Bharat Cement futures. Stop loss 33.31 and target 31.31.
Well, in Vishal Malkan's first pick is a buy call in LT Finance. He has a target of around 190 rupees. Stop loss is placing at around 175 rupees per share. Second pick, he's going with the buy call on Strides. Oh, there he has a target of around 860. Stop loss he's placing at around 810. His third pick, he has a buy call on Century Textile. So there he has a target of around 1,475. Stop loss he's placing at around 1,370. And finally, he has yet another buy call. That's on Apollo Tyres out there. The target price is at around 285, stop loss at around 261. But that's it from me and the entire Power Breakfast team. Thanks so much for watching. Here's wishing you all a very Merry Christmas. Fast Morning Call comes up next.